Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a fantastic day. We're taking a look here, of course, at Terra Classic, helping you understand best practice and big picture. And if you are new to the channel, new to the whole thing here, I'm actually attempting to make videos with my left hand. It's kind of a cool little fun challenge that I'm doing. Not by choice. I do have some range of motion with my fingers now, which is good, but it'll probably be a little while before that's back on track. Basically just attacked by two pit bulls when I was walking my dog. We're both alive, we're both surviving, and the owner agreed to pay medical expenses. So, hey, win-win, right? All I gotta do is deal with some intolerable pain for a while. Anyways, that doesn't matter. What we're here for is to help you understand where we're gonna go here. And this is really cool, the way that things worked out with Terra Classic. In other words, you see this descending trend, it's essentially broken above. And that's fantastic news. It broke above and bounced right off the key level support. So awesome stuff there. We're going to take a look at that and much more, and obviously see what the overall sense is too. And the traditional markets are struggling today. So it's nice to see Terra Classic get some of that, that Bitcoin dominance and effectively allow for that price to increase. Okay. Keep in mind that could imply we might see an inverse pairing there, essentially allowing for us to maybe see a sell-off if Bitcoin does well. But at this point, we'll find out more and kind of see what the technical analysis really truly does tell us. So in that sense, if you're new, once again, to the channel, just keep this in mind. I love teaching people to trade. I've been trading for over 17 years. This is my passion, so that's why I created the channel, to help, essentially help people get where they need to go. I do have a trading academy community and, of course, signal group where I send out signals for every single trade that I take, and they kind of look like this here. Like, for example, most recently we took some healthy profits on XRP, 61%. Prior to that, of course, Bitcoin 20%. That was a 20-day hold, though. Keep in mind there are some swing trades that we have, and then they're traditionally designed to be held for less than a week, and we're looking at 80% in 4 days. And of course, Ethereum we took 77% in 2 days. So again, just some cool stuff there in that regard, and like just the results that these people are having is just phenomenal. Right? They're using Bitget first of all, and second of all, they're doing very, very well because we're all working and growing together. We have day trading, we have basically swing trading concepts here, and it all kind of just meshes well because we have that support dynamic. Speaking of support, if you want a phenomenal exchange, highly recommend you use the link in the description below for this bonus transfer USDT. Essentially, they give you that amount every time you register and trade with them. So in other words, before November 30th, if you were to use this link, you would essentially be able to qualify for upwards of 4,000. That's not the important thing. What's important is that it's a phenomenal exchange in the sense that it's really fast level 2 data. It's extremely reliable. You can get in and out of your trades quickly. There's a lot less slippage, and the fees are the lowest that you probably find in the market right now. Because at least that was the way it was a few months ago when I first started working with them. Okay, so again, highly recommend that. They also provide leverage in the United States without a VPN. Right? That's phenomenal. We don't see that very much. So, okay, that's where we're at here for now. That's kind of the intro. Get that out of the way. And what we want to do is kind of look at some macro here, right? Because we did address yesterday that the macro was looking pretty bad, and we were trending closer to about 29, upper 29 slash low 30s, and it eventually came down to that 28,000 range that I was mentioning. I did mention, of course, and this isn't a told you so. It's just simply put the technical data was telling us we were below that descending trend line, and the probability of us coming down to hit this level of 28,000 is pretty high, right? Originally it was 27.6, but when I drew out the Fibonacci retracement levels, you can see how perfect it is. Look at it, pretty much bounced right off of that. And it's funny, I was working with one of my admins last night, and we were kind of looking at this here, and it was outside of its standard deviation according to the volume weighted average price, and that essentially allowed for it to bounce. We'll take a look at that on the 15-minute here in just a little while. But I just want to kind of preface and let you know that it makes sense as to why it bounced off that level, because that is a very standard bouncing point. 0.786 is a common area in which the price will retrace down to and then recover. Okay, so again, I think the worst is behind us in that regard. We should expect some green moving forward, but that's generally what we're looking at there. Let's start with the moving averages and kind of see. The 50, as I mentioned before, is going to work concurrent with this ascending trend here. Okay, that's really good news. Basically just telling us and reaffirming that the price action should go up higher, and if it does come down lower, it'll bounce off that level somewhere in the range of 26,400 or higher. Okay, I don't think we're going to see much red today. It does feel like a green day based on the overall sense of how it bounced and how it's holding, but we'll look at other indicators too to ensure. But as you can see here, the the 20, sorry, that's the problem with taking pain meds. You don't have a super amount of clarity. But what I'm getting at here is the 20-day set moving average is effectively allowing for the price action to bounce off that level. So we got two positive things coming into play here, two nice strong support levels. Another thing as well, if I recall correctly, the 50 on the RSI, we got this nice little bouncing point here where the price is essentially bouncing and likely going to increase further from here. So if we take a look at the MACD on the daily, we can see the price action is moving down. That's pretty standard, of course, based on the recent activity. So for lack of better terms, that doesn't matter too much when you see the MACD starting to squeeze itself really tight. That's really just, it's not super reliable in that regard. So oftentimes I just kind of disregard it when we see something like that. I mean, hypothetically, we should expect further downside because of the simple fact that we see, the oscillators increasing, but that doesn't necessarily mean that it's going to continue lower because we have other supporting factors. I'd much rather trust 50 on the RSI, key level Fibonacci retracement, as well as a moving average 50 on the 1 day. Those things all have a lot more weight than a MACD. So to me, we got 3 out of 4 reasons here to consider potential upside moving forward. All right, next thing we want to look at is moving averages on the 4-hour. This is where it gets interesting because they're not fantastic. There's no lie here. The 200-day set moving average, which is a fairly reliable indicator on the 4-hour, is basically telling us that we're below that resistance. We have been for some time, so it's not like it's fresh news. But unless we break above 32,000, I wouldn't say I'm bullish on Terra Classic, right? And again, keep in mind when you bounce off a support level and you move upwards, for lack of better terms, it doesn't necessarily imply that it's bullish either. It just implies that it's no longer descending, and in most cases, if you're not descending or ascending, you're range bound from side to side, or within a channel. Right now, that channel could very well be 28,000 to 30,000. There's a chance it could go higher, of course, to hit this resistance level at about 31,200. But generally speaking, between here and there, it's hard to say just yet. We're too early to kind of identify. But once you identify a range-bound trend, essentially, then you can really start maximizing your benefits of shorting when it hits the resistance and longing when it hits the support. Kind of standard rinse and repeat stuff, but we're not there yet. We don't have full-on confirmation. So to me, 4-hour doesn't look fantastic. We're underneath 50 on the RSI. We do have potential convergence, though. This is something we want to pay attention to. Again, it doesn't necessarily mean it's going to happen, but the 12 is soon to intersect with the 26 in upward fashion. These are exponential moving averages. When they intersect in an upward fashion, it's considered a convergence. The price action continues higher. The inverse, of course, applies for a divergence. So for lack of better terms here, the important thing we want to recognize is that this is starting to dissipate. Basically telling us that the bears are losing control and the bulls are gaining control. All right, so that's generally what we're looking at here. It's pretty nice. I mean, the overall sense of things. Oh, geez, sorry. One hand sucks. All right, so here we go. Let's get back on track here. So what I was summarizing in the 4 hours, we have mostly disadvantageous stuff, but the MACD could be shifting positively. So we want to pay attention to that. It doesn't necessarily mean we just want to take a trade because of that, but that does absolutely help. What also helps too, if we look at the 1 hour here, is the higher lows. That's really telling us that this shift in momentum has occurred, because previous to this, we were for the most part making lower lows rather. Okay, so you can kind of see those lower lows forming, and now that we have higher lows, that's the first thing you want to identify in a trend reversal. So, and just to clarify too, when I say trend reversal, it doesn't just go bearish to bullish, right? It's not like instantly we want to go to the moon because of this. The thing about higher lows though is that it allows for you to make that transition from descending trends to ascending trends if it continues. So again, we want to pay attention to see if this continues, but for the moment, it's kind of where we're at. So what we can do is draw out a little trend line here and kind of see, generally speaking, what's going to happen next, because at this point, if it stays above this ascending trend, continues to make higher lows, then breaking through this resistance level on Fibonacci right here at about 30,000 will make a lot more sense. And it'll actually allow for it to happen. In other words, the price will come up here, probably get rejected, and then we'll see a pretty strong increase here. And that's oftentimes a short squeeze because a lot of shorts are hedging their bets right at that 30,000 range. And then, of course, the price will come back down to bounce off this key level support and continue higher. That's a common characteristic in breakout patterns. So we're going to be looking for that. Is that forming just yet? No, it's hard to say. It's way too early. But we do have higher lows, and that's the important thing. Okay, so I'm not worried about higher highs. Those can come later. All right, that's kind of what we're looking at there. Last thing we want to kind of summarize here with is that we do not have confirmation for a long position. So again, this is one of those things. Ichimoku cloud is a very uh, conservative indicator. It only gives you confirmation when you're on the right side of the tracks. And what that basically means is when you're trading, the best traders always line themselves with the momentum of the trend, right? That's why we didn't want to take any longs recently, because lower highs were continuing to be printed. So in that regard, if you were to continue to just say trade and move forward here, you would have the opportunity to possibly take some profits, but you don't have confirmation yet. And what confirmation is to me, according to the cloud, and this is something I use pretty exclusively, in addition to everything else we've looked at, of course, this one is definitely a helpful factor. We've got two leads here on the cloud. First of all, they're based on moving averages, and they effectively tell us if you are above or below a specific trend. So as we can see, the trend is continuing lower, right? As well as the actual cloud itself. So to make it really simple, we're underneath the cloud. You don't want to buy in at that point. It's a no buy zone when you're either in the cloud or below the cloud, at least for a long position. So if we see that and we can acknowledge that, and then we understand also that the conversion line, while it's above the baseline, is positive, that tells us the momentum has shifted bullishly. The lagging span still hasn't been clear of any price action. That's this green line back here. And once that's free and clear, then we'd have a much better chance. So what we're looking for is 3 out of 3 things. In other words, we want the price action to inevitably break above, right here, okay? And if we have that same exact pattern, okay, we're going to see something happen with the lagging span, for example, and then it's going to be free and clear of the price action. And that's a case in point where we want to consider taking entry, okay? So again, those are things that you look for. I have a walkthrough on Ichimoku Cloud, so you understand what I'm talking about here if you want to look at that. But the idea and the concept is to essentially help you understand that we only have 1 out of 3 indications right now telling us that we have a potential viable long position, right? And I know what you're thinking to yourself too, well, why not get in now if it's going to come up there anyways? Well, we don't know if it's going to come up there yet. Just because we have higher lows doesn't mean that we're going to break this resistance at 30,000. There's a lot of things in play here that are preventing it from breaking out because the bears want to hold the price action below a specific point. Okay, again, greed is a very powerful thing. If you understand what the whales are doing, then you're going to have a lot better a lot better chances, if you will. So again, just some handful of little things I try to look at. The last thing we want to try to maybe peek at, which isn't going to help us much, is TD sequential here, because we do have a lot of resets. But if you see here, came all the way down to a 9, bounced off key level support, and now it's been ascending ever since. So this is a positive thing here in that regard, helping us understand that we have been overextended for a little while to the downside, and that a recovery, relief rally, whatever you want to call it, would essentially make a lot of sense, and that's what it's doing now. Okay, so the important thing that I want to kind of emphasize here is that this low is higher than the previous low, and even though we rejected off this area, it didn't come crashing down from there. It came down and recovered itself about 2/3. That's a very important factor. Those are things you want to try to look for to tell us that there is potential for further upside. So I would speculate at this point, based on what we've seen here so far, we have a much better chance of increasing than we are decreasing in the relative near future. And that shift and change occurred yesterday. That's why you constantly need to reevaluate coins if you're going to be trading and understanding different time frames, because yesterday's analysis is a lot different than today's, right? And the main reason why is because we're seeing that shift in momentum, and we have a lot more positive than negative here based on key level supports and previous moving averages, essentially. So those are all things that kind of factor in. So when you're doing your own TA, for example, make sure you are fairly thorough. I know it can seem a little cumbersome when you're trying to do this and take entry, but if you're not, you're doing yourself a disservice if you're not being fairly thorough and looking at multiple time frames. A lot of day traders, when they first start out, they'll just look at specific 1 hour down to the 1 minute charts, which is all well and good, but you're really putting your blinders on and you're not really looking and seeing the big picture. And the big picture has to match the small picture. The macro and the micro are both equally as effective. That's why I feel the 1, 4, and the the 1, 4, and the 24 hour are the most important. One last thing to note here, because I did mention this, I just remember that we're going to take a look at the volume weighted average price. Do you see where the price comes down here, where it kind of came down to bounce? We can see where the price action essentially bounced off the key level support. It effectively was outside the standard deviation lines here, right? And then it came back up and tried to break through, but it didn't. So as you can see here, anytime it comes above that volume weighted average price, it's essentially causing that contraction. It's going to hold it in place. So if you are trading and you see outliers like this, for example, that's a key indication telling you that the price action will likely bounce. And the important thing is if you're going to take profit somewhere in this range here, below the most recent high, because that's a case in point where that's going to be a resistance level. Again, I teach all this in my trading university, so be sure to check that out. It's a lot of my graduates are doing very well, and it's just fantastic to be able to be part of this with them. I mean, as you can tell, a lot of these results here that you're seeing, these are folks that I am trading with day in and day out. It's just a phenomenal experience, so I cannot believe how fantastic some of these guys are doing. Amirsh, good job, buddy. Speaking of which, I've missed out this week based on my injury, but I will, typically on Mondays, I'm going to have results that I send out where I just kind of summarize everything that we've done here and maybe pick a, trader of the week and kind of go from there, kind of just, have a healthy, fun little competition because everyone is doing really well and I'm super impressed. So keep up the good work, y'all. I appreciate you. All right. Hey, thank you so much for joining me. I look forward to seeing you in the next video. Have a great rest of your day.